All right. Hello and welcome, everyone. This is a status conference for docket number 20140135, GEMS. We've got an agenda, just a brief introduction, which we're already doing. I'd ask if you, instead of doing introductions on video, if you could just in the chat put in who you are, who you work for, and that way we can spend most of our time on the bulk of the agenda, which is a presentation from HGIA, and then plenty of time for questions and answers. I'm going to focus that time on questions from the Commission and Commission staff, but if there is time, I'd be happy to hear questions from anyone else. With that, Gwen, if you are ready, I'm ready to turn it over to you.
Awesome. Thank you so much. And thank you to the Commission for this opportunity to provide fiscal 2025 highlights and our goals and plans for fiscal 2026. Next slide, please. Here's a quick overview of last year's highlights, which will be covered individually in more detail. Next slide, please. The combination of the Commission's approval to eliminate disconnection notices as a credit barrier, coupled with the solar and storage loan capital provided by the legislature, unleashed the pent-up demand for solar installations for Alice households, with a 241% increase in applications received during the 11-month 2024 period as compared to the previous year. Additionally, while we certainly did not receive an application from the entire universe of permits, using an unscientific method, we believe that almost 30% of the permits issued on Oahu in 2024 were for underserved households. Next slide, please. On November 30, 2024, at 5 p.m., I closed our portal and placed a moratorium on new applications to provide staff some time to work through the backlog. During this process, we also migrated applications to the Solar for All or solar and storage funding sources from the GEMS Fund. On Earth Day, April 22, 2025, we once again started accepting applications through a new loan portal. Next slide, please. While some may wonder why green banks like HGIA were awarded technical assistance and funding support for clean water initiatives, it is because there is a clear nexus between water and energy. We also found similar inequalities due to the high upfront costs in design and technology. Next slide, please. HGIA's Equitable Clean Water Initiative culminated with an on-site water reuse workshop held at the Entrepreneurs Sandbox, where we brought together private and nonprofit stakeholders with state and local government to bring visibility to two projects, both being developed by the Kobayashi Group, demonstrating the ease and challenges on demonstrating the ease and challenges on luxury versus affordable developments, as well as additional regulations required, technologies available, and ask for feedback on a strawman financing product. Attendees even had an opportunity to taste beer made in San Francisco from recycled water. It was exciting to see the level of engagement and equally important for state and local governments to get familiar with water reuse to be in compliance with Act 170, Session Laws 2016, which requires the utilization of reclaimed water for uses other than drinking for potable water needs in 100% of state and county facilities by December 31, 2045. While Hawaii has the potential to significantly scale water reuse at the building level, unfortunately, HGIA currently does not have a funding source available to provide this type of financing at this time. Next slide, please. As you can imagine, getting a federal grant requires a lot of work. During fiscal 25, we revised our work plan and budget several times to incorporate the lower funding level of $62.45 million as compared to the $100 million that we applied for. Signed an amended contract, issued 4 RFPs to support grant deliverables, drafted and submitted a quality management plan and quality assurance project plan, and worked on migrating eligible applications to the Solar for All funding source. Next slide, please. Act 40, Session Laws 2024 was signed into law on May 30, 2024, But HGIA's investment fund manager was not hired until January 3rd, 2025. He is currently working on the administrative rules to govern this program. For those of you who are familiar with the administrative rulemaking process, you'll know that this process often takes over a year to complete. This bill will allow condominium unit owners currently locked out of solar because they don't own their rooftops to co-invest in a fund to install PV and storage for Alice households. A win-win for both parties, as the Alice households will lower their energy burden and the condo unit owners will benefit from the tax credits. Next slide, please. HGIA launched the Hawaii CPACER financing program on July 1st, 2024 with 14 capital providers. CPACER does not rely on state funding, and qualifying improvements includes clean water, water conservation, energy efficiency, renewable energy, and resiliency measures. Next slide, please. Through a partnership with sister agency, the Hawaii Technology Development Corporation, HGIA administers 3 credit-related programs under the State Small Business Credit Initiative. The objective of this federally funded program is to bridge access to capital gaps for small businesses and nonprofits statewide. Next slide, please. To date, the program has unlocked over $30 million in capital in industries ranging from hospitality, healthcare, food and agriculture, fitness, energy, waste removal, and more. Next slide, please. During the last fiscal year, I also had the honor and pleasure of serving on the Governor's Climate Advisory Team alongside Chris Benjamin, Robin Campagnano, Chip Fletcher, Denise Antolini, and Kavika Riley, and found this quote from Dr. Fletcher to hold true on many levels. It doesn't really matter what industry or cause. Taking on the challenge to fight climate change or social injustice or anything else that matters takes courage. A little courage from the village will help all of us solve these issues for our children and our grandchildren. Next slide, please. In addition to courage, we need bold leadership and vision to ensure that we are all paddling our canoes in the same direction. However, the last vital ingredient is capital. Implementation of Governor's vision to facilitate the addition of at least 50,000 new distributed renewable energy installations for low and moderate income households will take capital, whether it's equity, debt, or tax credits, or all of the above. Unfortunately, with the signing of the One Big Beautiful Act earlier this month, the clock has started ticking for the 30% federal solar tax credit, making implementation even more urgent to both lower the energy burden for underserved ratepayers as well as to achieve the state's clean energy goals. Next slide, please. What I really appreciate about the Solar for All program is it isn't just a green financing program. It's a comprehensive program that provides technical assistance, workforce development, and capacity building. 85.6% of our funds, or the bulk of our funds, will be used for financing. However, 5% will be used for technical assistance, community outreach, and workforce development, 5.1% for administration, and 4.3% for capacity building. Am I frozen? Can you hear me?
Can hear you fine.
Yeah, we
Okay,
can hear you.
great. I'm going to turn off my camera just in case. I was just told I was frozen a little bit. Next slide, please. However, the challenge with the Solar for All funds are they are very strict eligibility requirements. The off-taker must either live in a specific census tract or have a federal award letter like SNAP dated less than 12 months from the date of application. Next slide, please. For multifamily projects, it must be subsidized with low-income housing tax credits or HUD Section 8 rental assistance, to name a few, which require strict income limitations. Next slide, please. We are thrilled that this program can also finance community solar projects with less than 5 megawatt nameplate capacity, delivering at least 50% of the power generated to residential customers, and we currently have 6 community solar projects in our pipeline. Next slide, please. We have approximately 22 million in solar plus storage loans available. Due to the changes in the solar tax credits, we anticipate applications for more investor-owned systems. However, one of our new deliverables for our PR firm is to amplify that our financing does not rely on tax credits. Our financing relies on energy savings, and while the federal tax credits for low and moderate income households who choose to install and own the system will sunset at the end of this year, the state solar tax credits are still available. While not as quick as a payback without the federal tax credits, solar is still cost effective because our financing is long term, which will help our underserved lower their energy costs while helping the state meet its clean energy goals. Next slide, please. We have migrated all of the residential ratepayer applications to the other programs in order to preserve the last remaining GEMS funds for nonprofits and small business off-takers. We have about 30 active applications in process, aggregating over $23 million in total project costs. This is after we recently expired 12 applications aggregating $15.17 million in project costs because we hadn't received the necessary information to underwrite these requests, which means that these applicants may still reapply based on funding availability. Our nonprofit and small business applicants are literally racing to the finish lines as we underwrite said loans once we receive all the required application and information. Next slide, please. With the changes to the federal tax credit and in an effort to assist as many underserved ratepayers as possible, we humbly ask the Commission to consider reversing Order 34940, which will enable us to release $18 million in GEMS loan capital and to become available immediately for nonprofits and small business installation. Again, as previously mentioned, the key to our long-term financing is what makes these installations cost effective. Additionally, allowing HGIA to also finance solar PV installations under our state revolving loan fund will provide the state the ability to access the 30% federal tax credit under direct pay, further accelerating loan repayment and recycling funds into new projects. Next slide, please. On July 7th, Governor Green signed Act 296 into law, with the primary purpose of this bill to stabilize the condo insurance market. But this bill also provides some $20 million in loan capital to finance necessary high-risk improvements such as repiping and fire suppression systems to help condos become insurable. This bill is also going through the administrative rulemaking process. Next slide, please. I'd like to take this opportunity to introduce my management team: Chris Anjo, Managing Director; Valerie Kubota, Residential Program Manager; and Tim Wong, Fiscal and Investment Fund Manager. We all previously came from the private sector, so we thrive on goals. As you probably noticed, the common theme of HGIA's objectives, which began in clean energy, is to bridge the access to capital gap, whether it's for underserved ratepayers, commercial property owners, small businesses and nonprofits, or condominium associations unable to get financing from traditional lenders. Our goals for fiscal 26 include committing and/or expending the remaining GEMS and solar and storage loan capital, at least 20% of the Solar for All funds, at least 50% of the second tranche of the SSBCI high cap funds, close at least $73.5 million in CPACER financing, raise at least 2 solar HUI funds, and launch the condo loan program by July 2026. Next slide, please. That's it in a nutshell. On behalf of HGIA, we'd like to thank all of you for your support and look forward to jointly lowering the greenhouse gas emissions, achieving the state's clean energy goals, and most importantly, making a difference in lowering the energy burden for our most vulnerable ratepayers. Thank you.
Thank you, Gwen, for your presentation, and thank you for keeping it so brief so we have plenty of time for questions. I'll first, Colin, excellent. I'll turn it over to our commissioners.
Just jump right in. Thank you, Gwen. I really appreciate the breadth and speed, although you went pretty fast over some interesting information. So I'd like to kind of follow or backtrack a little bit and understand better First of all, you asked about allowing financing under the state revolving loan fund. I don't know if you can go back to that slide. What are you specifically asking for some action from the PUC? Is
Yes.
our permission required to allow this financing?
Yeah, right. So thank you, Colin. That's a great question. So we actually have the 50 million state revolving loan fund, of which we have about 19 million available to lend. This is specifically only for energy efficiency, however. So we're not able to finance solar for state buildings. Um, if the fund could be expanded to also allow us to finance solar, then that will help the state to access the 30% federal tax credits.
Okay, so these are just for government projects?
It's only so the 50 million is a state revolving loan fund, just for state and departments and agencies.
Got it. And then why haven't we been able to use that money for energy efficiency? Is it just, has it gotten stuck in various studies or?
No, so we have actually, we did loan out 46 million to the DOE. We've made 4 loans under the state revolving loan fund for energy efficiency. We are in conversation with UH also for energy efficiency, but um, again, as we look towards, we weren't sure what was going to happen with direct pay, and Congress kind of left that alone. And as we look as we look at how many of our federal funds are being cut, this is one way for us to be able to access it without having to go through a grant making process or anything like that.
Okay, and then these would likely, the direct pay benefit would likely, at least not entirely sunset, but would be reduced for projects that do not commence construction prior to July 4th, 2026, correct?
Correct. But I understand, uh, like say UH and some others have projects that they are trying to work on because they have net zero goals.
Okay, great. But there is urgency there, is my point. That in terms of getting that federal fund, that
Correct.
funding, that 30%. Okay, got
Correct.
it. Next question, the solar for all, you had on a little bit later slide that you were going to try to encumber, I think 20% of the funds that you have left in solar for all next in 2026.
Yeah, so it is a 5-year program.
Okay,
We're actually, Chris is our managing director. He's also in charge of our commercial portfolio. As I mentioned, we have a number of community solar projects already in a pipeline that we're working on, and there is a sense of urgency for them too. So, the goal that we made was when I submitted the annual plan back in March. Since then, a lot has happened, especially with the bill that passed earlier this month. So it makes um, getting commitments out the door so that our projects can start construction even more urgent. So we're hoping to do more than that, but our
right.
goal was for at least that.
Okay, because that was my question really, because isn't it the case that even that the solar for all funds, in terms of leveraging their maximum benefit, it would be best to try to expend as much as you can before July 4th, 2026?
Correct. Yes.
Okay.
And actually, even so, we have to go. Well, so we come first, right? Because they need the capital before they can start getting the permits and everything like that. So yes, absolutely.
Okay. All right. And then last question, and then I'll yield the floor so that others can ask questions too. But you mentioned earlier of the backlog applications right now, you had 60 that were direct financing for just individual households, is my understanding, and then 408 that were third party based. So for those 60, I mean, those would be the most urgent, I would think, because they, likely have some interest in trying to claim some of the federal tax credits, and, would only be able to do so if their projects are substantially complete by December 31st of 2025. So, but did you say that you've already kind of figured out a way to process and move all 60 of those forward. Is that what you said?
No, so they're in various stages of processing, right? So we can approve it once we have all of the information, but there is a enhanced sense of urgency in our team because we don't want to be standing between our borrowers' tax credits, right? Because we, like I said, we come first. So we're processing it as quickly as we can. I know the team is monitoring the applications to try and move it forward as quickly as we can. But my second point of that was, yes, we're going to try and get the applications done so that they can get their tax credits this year. But even after this year, you know, our message to the community is going to be that we don't necessarily need the tax credit for it to make sense for you to install solar because our financing is non-traditional. It allows it to go long term, which makes it cost effective for the people that we'd like to serve.
Okay, but obviously those who are able to take advantage of the full federal credit will be better off. Like, so to maximizing that number of people is a goal, correct?
Yes, absolutely.
And are there any people that are sort of waiting on the outside? Because you mentioned there are some applicants who, applied, but you didn't have enough funding, and some are waiting, to see if they can reapply if more funds become available. Do you anticipate that there may be other direct financing applicants that are in that category now that could
Yes.
benefit if you do have more funds available?
Yes, and in that case, I was speaking more towards the GEMS funds for these nonprofits and small businesses, right? It's the residential rooftop that expires at the end of this year. I mean, very
That's right.
short ramp, but
Right.
the commercial projects, like as you mentioned, as long as they start construction by July 2026, they can get their 30% tax credits. They got to be done, I think, in 4 years, but
Right.
that they should be done within that. So we have been, in order to move applications, if we have been asking our applicants to submit the information we need, and if they're not able to submit it, we're telling them, you know what, we're just going to expire you. Please come back and apply if we still have funds available once you have all of the information that you need, so that we can just keep moving forward with the applicants who have are submitting the things that we need to underwrite their loan.
Okay. But if more funds became available, say through a PUC repeal um, of the prohibition against, I'm sorry, I'm forgetting the exact term
The,
for it. It was the
the
$18
order.
million.
Mhm.
Correct. Would that assist you with meeting some of these urgent applications and or potential applications?
It will definitely do so.
Okay. All right. I'll yield back to anybody else.
Thank you. Abby, you've got your hand up, and then we'll go to Commissioner Kauai.
Awesome. Thank you. I have a couple of questions, but I'll just ask one and then I'll pass it to Commissioner Kauai. Thank you, Gwen, for the presentation. You talked certainly a little bit about the new income tax credit changes, and I just wanted to drill down on, yeah, I know it's early days, but how you all are thinking about potentially changing or adjusting your deployment strategy. Obviously, you mentioned that the residential solar tax credit phases out at the end of this year. And you mentioned that commercial, we have a little bit more of a runway. There's also third-party residential ownership, which has a longer runway like the commercial projects. And then I know storage has even longer until 2030. And I've started hearing rumblings, just reading about this, that the industry is thinking about financing storage separately because of the tax credit. So I guess, yeah, my first question is, what sense do you get of how many GEMS program participants do have taken advantage of the federal tax credit? Like, is that a big piece of the calculus? I know that for you all, because of the on-bill financing mechanism, it's not everything, as you mentioned. And then my second question is, yeah, how do you have any plans to sort of broadly update the strategy, maybe focus more on storage or anything like that?
Yeah, so good question. So a couple of things. One is up until now, right, the homeowners who finance and have tax liability have been receiving their federal and state tax credits. Where the federal tax credits, I think, will hurt the most will be um, our lowest income households, right? Those without tax liability, those are the third party owned. In order, for the ratepayer, as I've said, we don't necessarily need tax credits to make it cost effective for them to install solar because they will save on the energy bill. But for the third party owned systems, for our lowest income households, they don't get the energy savings. They get the tax credits and a little bit of the revenue from the PPAs, right? So that is where I anticipate most of the focus will be over the next year. It will be third party owned for residential along with the commercial, right? But for the residential, third party owned. And I imagine then that will start declining as the tax credits also decline, right? Even with the state tax credit. And so again, our message needs to change to remind our homeowners that you don't necessarily need the tax credits to make solar cost effective. Regard of strategy. So we've been talking internally. We think that even for our Solar for All, so our Solar for All work plan was very detailed. We had to provide, to the number of, homes that we anticipate helping, right? So there was a bulk of it was residential homeowners and third-party leases for residential rooftops. There was a very small number. I think it was something like 8 multifamily projects and then community solar projects. We anticipate that the residential rooftop installations may be moving to the multifamily rooftop installations as well as to community solar. So what we're going to be looking at is based on our pipeline, we might be migrating the funds from residential rooftops to multifamily and to community solar.
Thank you. I'll pass it to the commissioners now.
Commissioner Kawai, you're up next.
Thank you very much. Gwen, thanks for your presentation. That was very helpful. I have a quick question as to, I know you orally have asked that we rescind the prior order. Have you filed a motion or done a written request for us to do so yet?
I think I might have written it in one of the information requests, but I think you're looking for a more formal request. Maybe I'll work with Mike and my DAG to see. I'm not quite sure what type of request that would be, so maybe work with them to
something formal in writing that would be helpful versus just a oral request. That would be, I think, be helpful for us in order to investigate it.
Got it. Thank you. Will do.
Thanks.
Next, we'll go to Chair Asuncion.
When on this slide, so if we open up the 18 million, how many projects is that roughly?
Yeah, so when we finance, it's hard to say because our projects range. Our commercial projects range because we're looking for the gems for more the nonprofit small business ones. Our commercial projects range from about 100,000 to about $3 to $4 million. And what we're looking for, let me back up. Certain off-takers are not able to get other leverage for us to leverage our funds because we're really looking at providing no more than 50% because we're trying to make the fund stretch, right? Certain off-takers though are not able to do that. So some of them were forced to finance the bulk of the systems, but for the rest, we like I said, our target is 50% leverage. So in total dollars, we're hoping to double that in order to do more projects. Okay. So I know, Leo, I didn't answer that question, but it's because it ranges, right? So the range for like 100 to $3 million.
Yeah. So you're looking at like about 6-7 projects, probably all the way up to like maybe 180 or so, 200 or so.
Yeah, it's probably going to be somewhere in between that.
Yeah, yeah. Okay, thanks.
Commissioner Kawai, I see your hand is still up. I don't know if you have additional questions, but if you don't, please lower your hand. Thank you. Other commission staff, Ashley, I see you have your hand up. Please go ahead.
Thanks, Mike, and thanks, Gwen. Just to kind of build off Chair Leo's question, in your last slide, you mentioned your goals. I'm just wondering, does HGI also set even like internal goals on like project numbers? I mean, I know you just shared that they widely range, right? So it would obviously probably be a range, but do you do internal targets or goals when it comes to projects?
No, it comes to us how it comes to us, but I would say the average residential rooftop system is about $75,000, $80,000. And on the commercial side, it ranges depending on if it's a small business versus, you know, nonprofits or, it just kind of ranges.
Thank you. And then just kind of as a follow-up, so with governor's executive order targeting a deployment of 50,000 systems over the next 5 years, I mean, do you even have a sense for reasonability, or just do you use that as some type of overarching benchmark as you're considering your deployment of funds?
Yeah, so that one is going to be a tough one again. So, because unless it's third party owned, right? So, we will need to, uh, and let me back up. So one of the other things that the Solar for All funds have allowed us to do is hire a communications firm, which we have never had before. That was one of the 4 RFPs that we did. And so again, we need to amplify right now the sense of urgency to submit the applications. Again, the direct homeowner ones that are looking for 30% tax credits, it's going to be really hard to apply now and take it to um, uh, uh, place in service by December 31st with the permitting and all the other things in play. But we're going to really have to focus on the third party owned as well as solar in general, and then also remind people that it doesn't, we still have the state tax credits and it still makes economic sense to install solar. Sorry, I know someone asked me a question about just batteries. So uh, with the um, Solar for All program, we are coupling batteries with solar, but it has to be solar and batteries, not just batteries. For the solar and storage funds, we could do just batteries, but pretty much all of our applications up until now is pairing both together.
Thanks, Gwen. Thanks, Mike.
All right, I see Chair, your hand has gone back up, so I'll go to you and then to Abby.
Yeah, Gwen, so if we reverse the order, right, pending whatever you file. So we're only talking, right, just confirming, you're only gonna concentrate on the third party owned and mostly commercial, right? And nonprofits. Those are the ones, so we're not trying to do anything, as you just stated to Ashley, about the residential ones that are the tax credit ending this year, right? Because they got to be in operation by the end of the year.
Yes, and so I'm going to say yes, and here. So yes, we will with the GEMS funds. We're going to be focusing on the nonprofits and small business, which are commercial installations. With the Solar for All funds, as well as the solar and storage funds for Alice households, we will focus on for sure third party owned because the tax credits are still there. And we will make sure that our PR firm amplifies that we don't necessarily need federal tax credits to make economic sense for rooftop solar for residential households. They will still get the state tax credits. They might not get the federal, but they will get the state tax credits, and it still will make economic sense because we're able to stretch out the repayments over the long term.
Okay, thanks.
All right, Abby, you're up next. And if you don't have a question, please lower your hand, but please go ahead, Abby.
Awesome, thank you. Um, Gwen, I was just wondering for those commercial projects to be able to get started ahead of the cutoff for the federal income tax credit, when would be ideal for a hypothetical order reversal? And I'm also wondering, I know that you're, per this slide, really close to finishing out the initial lending for all GEMS capital. So if we reverse that order and you all had another 18 million to work with, how much longer do you think it would take to expend all GEMS capital? Just thinking about your program administrative costs. I know that there would be some to make sure that you guys are doing collections, but I'm sure it would be less, admin overhead when you're not reviewing applications.
Yeah, so good question. So with the reversal, that would allow us to retain the principal repaid to recycle the funds as well as the interest earned to cover overhead expenses. We, again, the sooner the better because the times time is that has already started, right? The clock has already started ticking on the federal tax credits. The sooner that we can let our applicants, because basically what we're telling applicants now is you can apply. We have more applications in the pipe than we have funds for. So it's really whoever submits the first complete application that we need, everything we need to underwrite is we're going to approve first, right? And so we're kind of um, not discouraging, but yeah, discouraging people from applying because we just don't have enough funds. So the sooner we know that we will have more funds available, we can reverse that message and say, please apply because we have more funds available. The underwrite, I would say underwriting the loans and deploying the funds do take a lot of staff time, but that's probably, and I think my staff will agree with me, that's probably the easier part of our loan portfolio. It's servicing the loans after it's made that takes a lot of staff time. It's not only like the monthly billings that we have to work on, but it's like when the loans are delinquent or, there's issues, ratepayers change, they move out of the house. I mean, there's a lot of servicing that goes on behind the scenes after the loan is made. I think if I ask my staff, would you rather make loans or service loans? They're all going to say make loans because that's a lot funner than the servicing part of it. But the servicing actually takes the lion's share of our staff time and capacity.
Okay, that's really helpful. And then I just wanted to, I think from my own understanding, reversing the 2017 order, that would just mean that you all would be able to take care of only GEMS program specific administrative expenses before repaying the PDF to the balance of the GIF collections. So my understanding is that you would just cover admin and program costs and then pay the remainder of the net proceeds back. So it wouldn't be like you'd keep 4 million per se, you would keep like whatever the admin costs are. Is that in line with your understanding as well, just to clarify?
I guess it would be whatever the commission decides it's going to be. If you ask me what I wanted, I would say let us keep it for our overhead and additional loan funds. But if you say just keep cover your overhead for GEMS related loans, I can talk to my fiscal person because it's going to be record keeping. I guess we will do it via timesheets. I mean, we'll need to figure out internally to parse out GEMS funds related activities.
Okay, thank you.
Okay, I am going to ask one more question, but I wanted to put the consumer advocate folks who are here on notice that I'm planning to go to you next. And also if there are any other commission questions, now is the time to think about them. But Gwen, if you don't mind looking back a little bit at your request number 2, which is allowing the solar PV financing under the state revolving loan fund. I wanted to clarify with you, is there any, are you aware of any legislative action that would need to happen to support that request?
No,
No. Okay.
no.
Okay.
Just for a little bit of history, just to go back in time. The reason why the energy efficiency, the state revolving loan fund is only on energy efficiency is it was because there was a legislative mandate that required us to provide financing to the Department of Education interest free. Back in 2017, I think is what it was. And so instead of doing a one and done, we had then went back and asked for a $50 million revolving loan fund for energy efficiency for state departments and uh, agencies following that, not interest free though. We charged 3.5% to cover a little bit of our overhead on that.
Thank you. Last call for questions. Oh, yes, Chair, please go ahead.
Wait, so the state revolving loan fund, right, created by the legislature, right? And then enacted by the governor. And so what are the requirements to you for use of those funds? It's just energy efficiency?
Currently, it's just energy efficiency.
Okay, so how do we get to allowing solar PV financing is the commission side, right? Wouldn't that go back to the ledge to Mike's question?
Yeah, you know what? Let me go look at that bill again.
Yeah.
And I'll get back to you. Good question.
Any other questions from the commission? Seeing none, hearing none. Next, I'll turn it over to folks from the Consumer Advocate. If you've got questions, please raise your hand or turn your camera on, come off mute, and we'll try and get those answered. I am not seeing any hands going up. I'll give it just one more moment, but if not, then I think I'll turn it over next to questions from the State Energy Office. I think we've got some folks from the State Energy Office here as well, so if you have questions, please think of those. Okay, not seeing anyone from the CA. So State Energy Office, you're up next. If you've got questions, please raise your hands in the chat. Please come off mute and turn on your camera. And if I don't get questions from the Energy Office, I think I'm going to open the floor to anyone else who has questions. But first, State Energy Office folks, any questions? Well, Commissioner Yost, you work for the commission, but please feel free to ask another question. Oh, but you're on mute.
If someone from HSCO has a question, they can go first.
I haven't seen any hands pop up, so I think the floor can be yours.
Okay, I just wanted to go back to the CPACER discussion. Gwen, is there any assistance or guidance you need from the PUC relating to that program?
No, the beauty of that is it's not using any state funds, but it is totally aligned with our clean energy financing in addition to resiliency projects. So we have a number of projects that are in the works, hoping to close one soon, but it does, take into account greenhouse gas reductions and efficiencies and renewables also.
Are any of those projects potentially things that could be part of a resiliency hub that supports a community in a disaster situation?
So these are private lenders, right? So as long as there is a repayment, ability to repay, I think they'll take a look at it. But if it's, again, they're like even for me, I'm looking for repayment streams, right? So
Okay. And then the last question I had is related to community solar. I mean, there's been a lot of frustrations and challenges with the community solar program so far. Are you hoping, or do you think you would benefit from some reforms to that program to make it more streamlined, make the incentives clearer, and perhaps a little bit, more directed at low income benefits? Do you think that would be helpful to you?
I think that would be very helpful. In fact, part of the technical assistance in my work plan, which we are getting from NREL, the National Renewable Energy Lab, is I've asked them to be on standby in case there might be a way that we can use some of their expertise to help enhance the community solar projects or program here in Hawaii. And so they're on standby, ready whenever you are. But again, time is ticking, so we just got to move really fast on that. So just let me know if that's something that might be of value to the commission.
Great, thank you.
All right, I'm going to open the floor now to questions from anybody. If you've got a question, please press that raise button, which is in the bottom of your WebEx bar towards the right. Please come off mute and turn on your video. I see Rocky. Please go ahead, Rocky.
Hey, everyone. Thanks for that presentation, Gwen. And thanks for all these great questions. My question is related to grid services. Do you have any visibility into how many of these participants are signing up for battery bonus, have signed up for battery bonus, or are signing up for BYOD plus, or are you utilizing the benefits of those programs to help pay down these systems for the benefit of these households and these recipients?
Rocky, that's a great question. So battery bonus, lots of, applicants with battery bonus, both owned by the homeowner as well as third party owned. So it really benefited the tenants, right? Or the low income ratepayers. When it was battery BYOD, so just step back. So we calculate bill savings. And so we need to understand from the contractor exactly how they're programming or what they're advising the homeowner when they install solar. So we had asked all of our contractors when BYOD first came out 2 questions. One is, are you going to participate in BYD? And 2 is, are you going to advise your client to go with time of use or the residential rate pay schedule. All of the contractors came back with no BYOD and no time of use. Their recommendation to their clients was opt out of time of use and go back to the residential rate schedule. With BYOD plus, we are again seeing that they are participating in BYOD plus, and so that's good because we can see that the grid services will help with the bill savings for the off-taker.
Thank you.
Thanks, Rocky. Any other questions from anybody? Abby, yep. Please go ahead.
Yeah, that was a great question, Rocky. And Gwen, this might be too in the weeds, but wondering if you know, if somebody was to enroll in BYOD Plus or one of our advanced DR programs that has something like an upfront incentive, would that incentive be just received by the customer if they're a GEMS program participant, or would that go toward paying back their system on the on-bill financing mechanism?
Yeah, so upfront incentives just like tax credits. So when we close a loan, we encourage our borrowers to get your tax credits and pay down their loan. And we tell them we will re-amortize it so the payments are even lower. Honestly, though, hardly ever happens. That hardly happens. And again, I can see why, right? These ratepayers are typically strapped for some cash, and so when they do get it, probably have other needs for that. On the BYD incentives, again, the upfront incentives depends on who the system owner is. So if it's a system owned by the homeowner, they will get the incentives. If it's a system third party owned, then the investor will get the incentives.
Thank you. That's really helpful.
Other questions, please feel free to raise your hand, come off mute, turn on your camera. And I suppose if you'd rather not do that, you could put them into the chat as well. But we still have about 40 minutes scheduled, and I'm very pleased we've gotten to so much so quickly. Thanks everyone for your efficiency. Rocky, yes, please go ahead.
Thanks. Yeah, I guess my other question is, are there efforts going forward to secure funding from the state, like direct funding? I know there were efforts legislatively over the past 2 sessions to carve out some budget for investing in GEMS, and at one point it was $300 million a couple of years ago, and it went down to, I think, 50 million. And then what happened to that? And are there efforts underway to try to secure some of that? And of course, obviously, with all the budget situations going on, I understand that budgets are under pressure right now. But just curious if you have any thoughts there.
Yeah, so unfortunately, it kind of all depends on the legislative sponsor and their willingness to help advocate for the bill, right? So back when there was a request for 300 million, which the legislature passed 100 million. However, governor had to cut $1 billion out of the budget that year because of the Council of Revenue's forecast had decreased. So it dropped down to 50 million, although we are so grateful because other programs lost, everything, not just half, right? Again, it depends on the will of the legislature and the policymakers and what programs are important to them.
Thank you.
Any other follow-up questions, additional questions? Give it one more moment. I'm not seeing any. Is anyone else seeing any that I'm missing? I don't think so.
If I could, I see some KIUC people in participants, and so not you don't have to reach out now, but we're looking at how might we help Kauai, and I know we've had some real brief conversations. What we're targeting in the agency is seeing if we can help with the multifamily projects. We don't have on bill, and so doing residential rooftop gets very risky without on bill, but perhaps looking at the multifamily projects or using our CPACE financing mechanism in order to mitigate our risks to help ratepayers on Kauai, if that's of interest.
Yes, hi, this is Beth from KIUC. Sure, let's schedule some time to meet, and we can talk about opportunities.
Sure, thanks, Beth. Yeah.
Thanks, Beth. Thanks, Gwen. Gwen, I guess since I'm not seeing more questions, I'll give you the opportunity if there's any final closing thoughts you'd like to offer.
No, I just really appreciate all of you. It takes a village, and because of all of your support, we have been able to move this program forward. So again, mahalo on behalf of myself and my staff for your support, and we look forward to continuing our good work together.
Thank you. And unless this will be my official last call, any last questions, is now your chance. But while I'm waiting for folks to raise hands, I'll just mention, Gwen, that we've just sent out information requests to you guys this morning. Feel free to take that, answering those as an opportunity to elaborate on any of the themes that you've heard today. to clarify as much as you can so we can get that in our record. And unless there's any other business to conduct, I will say thank you very much for all of you for attending, for your very informative, helpful presentations, all the good questions. And feel free to reach out if you need any procedural guidance on filing an official request with the commission. I'd be happy to help steer you there.
Will do. Thank you so much. Thanks, everyone.
All right. Thank you, everybody.
Thank you.
Thanks, everyone.